This is the Investor Connect podcast series, episode number 29, Greycroft Partners, and an interview with Will Szczerbiak. In this episode, Hal Martin from Investor Connect interviews Will Szczerbiak, who is part of the Greycroft Partners. Now, if you are phonetically challenged when you see the name in the show notes of the interviewee, that is the guest, it's pronounced Szczerbiak. And the guest, Will Szczerbiak, says to ignore the first few consonants. It's pronounced Szczerbiak. Now, the focus here is that Greycroft Partners are on top of internet and mobile applications. They finance technology and payment apps, such as those in banking and other places, and they discuss other financial markets, such as Bitcoin. Very interesting discussion. However, from his experience, Will discusses areas where he feels there are new and better opportunities that are going to emerge, such as in HR, such as in healthcare, especially healthcare, and interoperability. Now, Hal Martin raises questions on how Greycroft is unique and it's bringing benefits to the firms. He inquires about key criteria for what firms are looking for in order to acquire. And finally, the one example is the criteria within the millennial market, which is an interesting discussion. So we hope that you enjoy this interview where Hal Martin is talking to Will Szczerbiak from Greycroft Partners. So let's listen in.
So this is Paul Martin. We're with the Investor Connect podcast. Today we have Will Szczerbiak of Graycroft joining us. Will, thanks for joining us. Can you tell us a little bit more about Graycroft and what you guys are doing?
Yeah, sure. Thanks, and thanks for having me. It's a great opportunity to kind of connect with the community there in Texas. So Graycroft has been around 11 years, and we focus primarily on Series A investments and agnostic to geography. So we have investments in Texas, and we invest across the country, and we also have a couple in Europe and one in Beijing. So invest globally as well. But I think what distinguishes Graycroft from a lot of the other venture firms you'll find is our flexible approach to investing. So we don't have a minimum ownership threshold that we have to hit in every deal. We're flexible in terms of check size, but those two things obviously go hand in hand. We could lead rounds and issue term sheets. We probably do that in most cases, but we're totally comfortable if someone else, say there was a strong local lead in a place like Austin, say take a Silverton Partners, for instance, we would be totally comfortable helping them fill out a syndicate and investing behind them in a deal. And that ties into board composition as well. So we don't have a requirement that we have a formal director seat. We generally ask for board observer rights, and we like to be at the board meetings, and we're very engaged with our portfolio companies, but don't need the formal vote or director seat. We view it as being minority investors. It's not something important to us, and if the company has a strategic individual or someone that they think can bring incremental value to the table beyond what we could add, we're going to be at the board meetings as board observers. So why not bring that person on with the formal seat? And then when it comes to sectors, it's very broad. We're anything internet and mobile enabled. So that spans B2C and B2C. I'd say there's a slight lean in our portfolio towards B2B. But the real foundation, as I mentioned, is Series A. We're a bit more founder driven in our approach. And I'd say, generally speaking, it's post-revenue companies that are scaling quickly, sort of hitting an inflection point and want to bring on additional capital to continue to build the team and invest in customer acquisition, invest in product. Generally speaking, the rounds will look something like a $3 to $10 million Series A, in which we'll write something like $1 to $5 million. Again, to help the company kind of scale and hit milestones. And the hope is that they'll go on to raise more financing in the future and ultimately be a big venture type of outcome and a major important business in whatever category they're addressing. So that's how we view the world. I don't know if you have any sort of follow-up to that, but that's the brief overview of Graycroft.
Sure. So you focus on internet and mobile applications. What are the existing clusters in those areas that you find are getting a lot of attention these days? What do you think is hot out there now?
Yeah, so I could take a few. There's a few categories. One is financial technology and specifically payments. We've had a lot of success there. Right now, we're actually, believe it or not, we're looking at a payment API business that's analogous to First Data, but it's focused on the African market. So there, you have a large continent that's been largely cash-based and has a lot of different ways through which merchants can accept payments. They're very disparate, and it's disaggregated in terms of how they can take payments. So what this company does is allows merchants to effectively plug into an API so they can take payments from really any channel. It could be the mobile channel, it could be credit, debit card, directly from the bank account, and there's a number of other payment service providers across the continent. So all of those disparate channels can sort of plug into this API, and the funds will be settled in the merchant's bank account within a day. So it enables them to do business with a bigger market of customers, and really enables growth across the continent by capitalizing on the wave of electronic payments growth in Africa. So financial technology is an area where we're spending a lot of time. I mentioned payments. We've also got an investment called Acorns in the robo-advisor category, and it's a really slick application product that's focused on the millennial market, and it helps them learn about saving and investing. And what we found as we've sort of looked at the market is that millennials they tend to be somewhat skeptical of the incumbent financial institutions, the big banks. And companies that are able to offer a really sort of high-end product that can educate them about saving and onboard that market and attract that market, we've found to be very valuable and very strategic to some of the big incumbents, and they're also good businesses as well.
Great. So what do you think about other financial technologies such as Bitcoin, Ethereum? Where do you think those are in the process? Are those ready for prime time yet?
We haven't done it. We haven't done as much in the Bitcoin area. We actually have one business in Africa, a small seed investment in a company called BitPesa, which enables international payments via Bitcoin across the continent of Africa. But we haven't done as much in Bitcoin. We have looked at a number of blockchain applications. We haven't necessarily found one that really has the sort of strong business metrics and underlying unit economics that we really look for. It's still early in the adoption cycle for those technologies. So we haven't placed a real bet in it yet. Obviously, there's going to be applications in the financial world. We talk about smart contracts and clearing trades, things of that nature. In real estate, the same types of smart contracts associated with closing, residential or commercial transactions. We recently saw one that came across our table, and I've yet to take a call with the company, but it's in the ticketing area. And as far as use case goes, that seems like a pretty good one when you think about electronic ticketing for events and how easy it is to replicate those tickets. If you're able to build in security and the notion that there's a ledger that's able to validate the validity of a ticket at an event, that could be pretty powerful. So we are spending some time there, but not a ton at the moment.
I see. What are some of the other segments you see coming up aside from fintech?
Those are, payments and the robo-advisory category are the two that we've spent the most time on. We haven't spent as much time in marketplace lending or online lending. We feel that the valuations of those businesses have gotten out a little bit ahead of themselves in some cases, and ultimately they are effectively balance sheet lenders and should in reality trade as such, and we've avoided things that have focused on subprime. So that's a category of fintech that we haven't spent as much time in. One other thing I could mention is a company selling analytics products into the financial sector. So we have a company called Earnest Research that leverages a panel of credit card transactions, and they're able to inform whether or not, say, for a hedge fund, a Wall Street or a Walmart is going to hit, exceed, or or miss their earnings for a quarter based on their panel of credit card data, or across our portfolio, we're able to look oftentimes at competitive research for consumers, some of our consumer-facing companies, to see how they're performing and some of the KPIs and what they look like, such as churn, for instance, relative to competitors in their categories. So very valuable product when it comes to companies doing competitive research or, hedge funds looking to inform their investment strategies. And it's another one that's doing very well.
Well, we actually see a lot of interest in fintech going into other areas, converging, for example, with healthcare. I had a fintech company ask me, why when you go to a healthcare system like we have now and you're buying prescription drugs, why are you not getting loyalty points off those prescription drugs? And it seems like there's a lot of opportunity for fintech and healthcare to come together. Do you see any other fintech convergence applications out there?
Yeah, I mean, it can play into anything, right? I mean, if you take any business where, loyalty is one thing that you mentioned in healthcare, but also that have archaic billing systems, and a lot of the payments are taken via check or a fax credit card number, and it takes a long time for funds to settle, right? So if you look at healthcare being one of those, logistics being others, where you're able to apply payment service providers or other payment solutions to enable that money to be remitted and funded into a bank account more quickly. And obviously, from a business standpoint, that shortens your time to having the cash in the bank account. It shortens your DSOs, and that's beneficial for it. It is very beneficial from a working capital standpoint. So those types of businesses, we've looked at companies in taking international payments, for example. When you think about big corporations that have a bunch of suppliers abroad, a lot of times paying those suppliers or receiving payments from vendors that they have abroad, it could take time for that money to clear. The foreign exchange could present issues, and the result is a working capital crunch that doesn't necessarily have to be there and can be addressed via technology. So you think of companies like Currency Cloud that just got funded, Flow, which also just got funded by Bain Capital Ventures, companies that are addressing a key issue for an enterprise when you think about their billing cycle and how quickly they're able to have the cash settle in their bank account. It presents a lot of advantages from a working capital standpoint to adopt vendors that do that. And that applies, again, across verticals. I think you'll probably see things like that in healthcare and logistics and other categories where a lot of the historical payments have been more paper-based.
Well, what do you think about artificial intelligence? We talked a little bit about data analytics and how that can be applied to fintech. What about AI being applied to fintech? Would you see anything going on there?
Yeah, I mean, AI, obviously that's a very broadly used term these days, and it's utilized to add sex appeal to what a company's doing. What it really is a series of algorithms, whether that be deep learning or machine learning or other statistical types of practices or theories that are applied to a large data set. And I think you could certainly see that in fintech when it comes to evaluating investment strategies and looking at historical returns and where opportunities may be in a market. But I think when you look across industries, take HR, for example, you have data that resides in all sorts of different systems. You have a recruitment marketing system, an ATS, you have a talent management system. I think the holy grail, for instance, in HR would be able to make all of that, normalize all of that data, first of all, so you can use it and you can mix and match it and pair it, and you can generate insights from that data that can tie, okay, I'm recruiting for a VP of product position. Here are the 5 attributes that our last VP of product had, and he or she was an excellent candidate. And this is how we should be screening when we're looking across our recruitment marketing platform, and we're filtering candidates that are coming in on the front end based on the performance and tying that to the performance of someone who was actually in the firm and performed well. I think all of that data resides either within an ATS or it's out there and you're able to pull it from publicly available open source types of places. and you're able to tie back to a specific position and be more predictive or prescriptive about whether or not that person is going to succeed. And ultimately, that would yield an employee, being more successful in a job, not churning, which every company would realize an ROI from. And then even if you look beyond that, you could say, okay, based on let's plug in the attributes that our employees have been scored on, and what the positions we have available across our company and what attributes they require. And you could say, okay, this person may be better suited in another position. Let's offer that opportunity up for them and give them the content because we have learning management system investments and MOOCs that can help them develop a skill or two, and then maybe they'll be very successful and happy in that other position. I know this is something that GE is looking into in a meaningful way. So HR is a category where I think AI is really going to have an impact. Machine learning, healthcare. When you think about outcomes, you're sitting on so much data. Interoperability is a big issue, and there are companies that are looking to solve that, and some are addressing it well. But even if you plug in a health system and you plug in the data that they have and the data sets that they're sitting on, and you say, okay, this person has shown these 5 symptoms. This is the different care plans they've been prescribed and medications they've been prescribed across the, say, several hundred people that have shown those symptoms. And here are the ones that have yielded the best outcomes or kept readmittances down and have otherwise brought costs and taken costs out of the system. I think those are really interesting applications that play into the broader macro shifts of how people are looking to realize ROI from their software investments in HR and healthcare. It plays into the macro shifts with healthcare specifically when you think more about value-based outcomes being compensated as opposed to just delivering care.
Right. That's a big topic in healthcare for sure, and there's quite a bit going on there with data analytics, AI, and fintech at the core of it for sure. So let's switch gears for a moment and talk about when you bring companies in and you help them grow and you're taking board seats and observer rights and so forth. What else do you guys do for companies that come into your program that makes you different from the other groups out there?
Yeah, I think one of the things that has really resonated with our portfolio, and we really try to focus on the revenue generation and customer acquisition side of the business. So we look to operationalize that by putting together a series of innovation days with large corporates, and these can range from anyone from MasterCard to Disney to Ally Financial, and we'll bring in 5 to 10 of the top executives of those companies, and we will show them a list of our portfolio companies and what they do. And they will usually select 5, 10, sometimes 15 companies that we'll usher in to present over the course of a couple of hours. And it's direct, high-level engagement that our portfolio companies are able to have with the decision makers at these companies. And oftentimes it'll drive business in the form of business development relationships, partnerships, customer relationships, and in some cases, acquisitions or exits.
Well, I know it's a hard thing to answer because everybody's different, but when you go to sell a company or the company goes to, merge or go public or what have you, what do you find is the key criteria among the companies you deal with? What are they looking for that makes it a good fit for them? Is it culture? Is it, filling a product gap? Is it filling a team gap? What do you find is the most common thing that companies are looking to acquire when they go to acquire portfolios that you've invested in?
It's probably a combination of all of those things, to be honest with you. I know that's to some degree a cop-out answer. And some strategic buyers will focus more on, they'll weight all of those things, and some will be more important than the others. But I mentioned earlier, if you take some of the incumbent banks that are out there, one of the challenges that they've had is as I mentioned, addressing and acquiring customers in the millennial market. And one of the things, we don't know this yet, but one of the things we view as strategic about a company like Acorns is they have a captive audience that is is made up of that market and that demographic. So that is something that they need, because the bank, with the big banks, when they acquire a customer, it's very rare that a person leaves their bank. So if they're able to create that lock-in early, they can sell them a bunch of different products and be with them as they grow and their income grows. And those customers are difficult for them to access. So some of it could be customers, some of it could be, in certain cases, you're seeing in the autonomous driving category, you have companies that have really, really high-end computer vision teams that have come out of places like MIT or Stanford or Caltech, and they could be very strategic for a company from a team standpoint, even though there's no revenue or customers. The team, a company like GM buying Cruise really needed that team, or Uber buying Otto. That was a team that they felt was very strategic to what they were doing in the future of their company. So in those cases, team may have had more of a weighting than others, like BlackRock's acquisition of Future Advisor, where it may be more of the customer file.
Cool. Well, it looks like there is a little bit of everything. There's acqui-hires, there's buying revenue, there's buying customers, and buying product is in there as well. So it's probably a little bit of everything, like you said. We covered a lot of ground in a short amount of time. What did we not cover that you think is important for people to hear about?
No, I think that covers it. I just think, from Graycroft's standpoint, we're very excited about the business today. We have a really exciting pipeline of opportunities, and we've backed and continue to back really amazing founders, and we're excited to continue to do so. So to the extent that you have something that is exciting and would like to talk to an investor about, get advice, our line is always open. And as I said, we'll invest anywhere, and Texas is I know there are a lot of interesting opportunities and companies being built in that region. I guess it's an exciting time to be in venture and learning a lot, and we get to see a lot, and we are very much looking to deploy capital both out of our early stage fund, and I should mention we have a growth fund which focuses on more upstream opportunities. Companies that tend to have a little bit more of a proven revenue model and 10 million or more in ARR, they tend to be in the Series C type of range when you think about round, but obviously it doesn't necessarily have to be that. But we're just excited about it. It's a good place to be right now, and we're excited about where things are going and being a part of it.
Well, I know you've invested in two Texas companies, Drop-Off and BuzzPoint, and we appreciate that. And you've come to our conferences, and looking forward to seeing you at our next tech conference in the fall, and appreciate your support there as well. And thank you for taking time to talk to Jay. With that, we'll go ahead and close it out.
Absolutely. Enjoyed speaking with you, and thanks a lot, Hall. Looking forward to coming to joining you at the conferences and spending more time in Texas in the future.
Great. Well, thanks so much.
Yeah. No, thank you. I'm looking forward to it.
Cool. All right. Well, I'll let you go, and thanks so much for taking time.
Thanks, Hall. Really appreciate it. All right. Take care. Bye-bye.